Good day, everybody. Brian here from quantlabsnet.com. Last night I sent out an email to some of my people on my email newsletter. If you want to get on it, just go to the Learn tab at quantlabsnet.com right here, and then you can sign up for what I'm working on. So I just did a pretty massive drop into my file share. I'm going to go over some of the sample coding projects that I worked on. So about 26 or 20, I can't remember the exact number, but right here, this is the description, the summary of what has been added. So in here, we've got all Python AI code generated, all friendly towards the JetBrains PyCharm IDE for Linux. The project file itself is uploaded, so it's pretty easy upload or installation and get it running within your JetBrains environment. It should run once you get all your development, your Python interpreter set up. But this is what it contains. So this is the give me much more. This is about roughly 1/4 of the amount, and more to come after that too. So in here, what we've got here is a volatility in Python. I just went through a article. I'm not sure if I'm going to post it or not. Just timing's not on my side these days. But basically, what it said was is that a lot of hedge funds are preparing their algorithms or strategies or whatever to handle unpredictable volatility. All this stuff is coming from within industry of what a lot of these firms are preparing, what they're doing. So these are some of the examples here. So what we're dealing with is rough volatility modeling, obviously econometric uses and how you can handle the volatility. Um, Due to volatility, you might have to calibrate your portfolios. And one of the best ways is using deep learning. There's also, because the standard trend is among whoever retail, these 0 day uh, to expiry options are popular. I think those people get blown out with the leverage. So I'd wind that idea down. It's top of that, you have the buy side volatility as well. And of course, machine learning's still going. So here's some examples of that. Lots of deep learning stuff using reinforcement learning, how to hedge with the with AI, namely deep hedging. As I said, all of this is revolved around options. 95% of it, along with I have that course available for anybody who wants to join whatever features and options course, very deep, goes very lengthy, giving you a solid introduction to this stuff. Without it and understanding it, I just don't know how you can expect to get into this field. There's also machine learning operations, how that impacts quantitative research. Um, we also have, because everything's all derivatives, is really what it boils down to, options and futures, and all the different types of strategies that can come out of it. And how does deep learning affect that? On top of that, now what I'm saying here is based upon what I've seen and what AI is spitting back out in answers and code generation. A lot of it is around these derivatives. Okay. So here you're going to be kind of surprised. So these are your general systematic trading strategies. But what's happening is a lot of the um, uh, players out there, I'll be doing a webinar on this, on how a lot of the HFT does gold trading. So if you're doing some form of arbitrage, usually they're going to use an ETF to compare their strategy and their combined option or set of options and futures against the arbitrage it against the gold ETF, GLD, or whatever. That's an example here. Okay, so that does happen. We also have crypto quant strategies as well. Just another alert out there. This week, I'll also be doing a very deep dive into how the HFT shops trade high frequency, how they trade specifically Bitcoin for the volume and liquidity that Bitcoin has now. But remember, that's all unregulated, especially specifically if you're trading on a unregulated um, exchange, namely Binance or Deribit. Um, so there's some funkiness going on there. I can't say which or why, but if you attend the webinar on that, uh, you'll be able to understand what I'm speaking about. That's all done in C++, by the way. On top of that, all I can say, if you're one of these hardcore crypto traders, Ethereum, Bitcoin, Solana, XRP, whatever, all I can tell you is that those markets are very manipulated. Say it again. Those markets are manipulated. Like it or not, I've done this. I've done the deep dive into it. I can guarantee you, if you knew what I reveal in that webinar, you'll know exactly what I mean. And that will be Tuesday or Thursday night. Can't remember which one, but that playback and both playbacks will be put behind my paywall, just so you know. The other big one that will type of systematic trading that will do very well is tail risk. So if you're on either tail of the normalized distribution and pricing, um, it can do very, very well for you if you get the call right. So there's some examples in that um, as well. Another big one is because of the volatility that's coming, people just don't really understand unless they go down the path that I'm going to understand what the HFT shops are doing with all the secret soft stuff that I've been kind of revealing. You're going to see a lot of market regime changes under your nose, and you won't know why the market is performing the way you expect it to. That's because a lot of the volume that is manipulated and hidden through dark pools and the like, um, they're switching the market regime on you. You wouldn't know. So therefore, your predicted forecasted trading result will not work out because of that or volatility, which will be unpredictable. So there are these examples that I'm talking about right now are very high level. Okay, as I said, you can go far and deep and wide with these using AI once you get the code base to work off of. As I said before, you can also convert any of these projects into C++ and go farther and deeper with the C++ to see how the quant shops are doing it. And as I said, I've already done that kind of with the C++ with some examples in both both for gold and Bitcoin because those are probably the um, most popular assets to trade right now because of the uncertainty and all that. Bitcoin could be for sure manipulated. Uh, Gold is another matter, but if you watch that video or the live webinar, you'll know what I'm talking about. Because the big HFT shops have pretty well both sides covered. If there's a loss, they can cover that. If there is a gain, an upswing, which has been happening over the last year, uh, it's a great area to be in from a trading perspective. The other big one that will help in uh, in predicting, especially in a crazy volatile market, sentiment analysis, not what you think it is. Um, I'll probably be looking at a high level some of the data sources that you could use for some of the product assets to watch. One of the big things I want people to understand is when you're dealing with, let's say, gold, let's say oil, let's say S&P 500 in the futures and options market, each and every single one of those operate differently and can easily be traded totally different because a lot of these HFT shops are going to treat each one of those differently. And it's the same thing with currencies as well. You have the six big currencies to choose from. I haven't done any deep dive in that yet, but right now, being September 20th, 2025, the two currencies that look like they're heavily going to be traded, again, from the news that I've seen, is both the yen alone in the futures and options market. That's a big one. That's a safety trade, no different than gold with a carry trade. But there's also Australian dollar and oddly enough, the Mexican peso as well. That can be traded on the futures market on the CME. Volume's another story. Liquidity is another story. But each and every single one of those, if you're trying to trade only Australian dollar. It's going to be a totally different operation of trading and style of trading and modeling and algorithm development used for Australian dollar, and it'll be completely different for Mexican dollar. Why? Because they operate under different market, different conditions. Similar, yes, but each and every HFT shop can manipulate a lot of these currencies on top of that as well. People will always argue that, but if you only knew the volumes that are being traded, I don't know how people can expect. One of the big things I can really talk about here is that part of the big factor when you're dealing with the vanguards at what 10, $15 trillion under management, BlackRock, what $17 trillion under management. No one can tell me that these are market movers. Okay, when they trade, they have a huge impact to 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 move the market. But there are ways that they focus on the execution through dark pools, through different types of order strategies to lower their volume on block trades and be able to minimize their impact. But people wouldn't know. They'll just know it's from someone that's big block trading. They just don't know where it's from. Usually, it's going to be from one of those big operators, Citadel, Main Street, and they're big. But compared to the likes of BlackRock and Vanguard, State Street, you can't tell me they're a lot bigger. They are. Citadel's a big boy, yeah, in the industry, but big ones is the top three: BlackRock, Vanguard, State Street. All right, so the next couple of sections, and again, this is just one quarter of what I'm putting out there. Okay, so enough about machine learning. Actually, yeah, a couple things I forgot to mention here is we've got the volatility covered. We've kind of got the machine learning covered. Then we get into the systematic trading, various types of trading strategies. So we already talked about ETF, we talked about the crypto, we talked about tail risk, margin regimes. So now let's get into alpha generation and pipeline. So pipelines is just one of these industry things, but generally it's a complete like a template on how to do data ingestion, generate your signals from there, and then develop your strategy from that. AI does can do all that depending upon what you prompt it. We've also have the ability to build out. I mean, I don't go very deep on this one, but you have quant research platforms you could build using Python or other cloud-based solutions. Also, things are rapidly changing as well, along with the AI development, and you can develop all kinds of different frameworks that go together. Allow yourself going through the Claude model, debug through that, and build other setup tools for that. So some kind of like basic examples of that. And then the other big thing let me just stop there. What you need to understand is with the way things are rapidly moving, coding, you have to be an accomplished coder to do all of this. There's no doubt about it. If you have the technical strength on the debugging, architecting, good, clean, optimal code, there's no excuse not to use it. But where most of the effort's going to have to be to really evolve in this space, specifically in the industry, you have to more focus on the trading aspect of things. So when you go through that, you'll be able to use that, and that's your priority. And the coding's less important, I think, as companies leverage more of that experience. For example, Goldman Sachs have their tools for all of their employees for their chats, which will eventually get replaced, will replace actual humans. And a lot of those will eventually become all AI, strategy development and the like will eventually become just purely AI, and then the people pushing the buttons like me to bang up the code. As long as the code's good, um, ask me again why salaries need to be paid, why all that. from a reality perspective, from a real perspective. Um, then, as I said here, what we're looking at with Python, like Goldman Sachs is a great example of where things have gone uh, over the last few years as the industry leader. Same with HSBC, where I've got an article on that where they're replacing a lot of their back office employees with AI and chat and all that. So that's coming. That might already been implemented for all I know. So when it comes to strategy development now, using Python, as I said earlier, many um, individual instruments like the difference between Australian dollar versus Mexican peso have their own characteristics, but there's still going to be a need of being able to cross asset portfolio strategies because it's like a one system where you still have to measure out an entire portfolio and see how one negative trading strategy may impact another trading strategy that might focus on something different if it's spread among just individual markets or instruments or a category of instruments like, for instance, currencies versus commodities, that sort of thing. Another big one that's going to happen is from an economic and political standpoint, where there's more and more, call it manipulation, less clarity in the Western markets. Other markets will come about, and trading volume will go to those markets. I can think of the Mid East. I can think of some up and coming Asian regions that are not yet on the roadmap, but may come and have the new trading capital or just new trading opportunities. Um, so Australia is a good example of that because I see Australia becoming more and more relevant, because they're more resource based. They have a big import export market to China that impacts their Australian dollar and the like. Um, so good things can come out of Australia because of that, including trading and their trading volume. Um, then we get into the generative modeling based upon the development of AI. Right now, I can't remember the name of it, but we're going to get into just uh, general AI, where it's going to be much smarter than what we have now. Um, and then, of course, we have the different market microstructure analysis, and there's different ways to measure that through order flow, or I call it hot capital flow. It's a huge deal. Needing to know where that capital is flowing to, is that volume, and it's a volume that's going to drive new markets and drive up other markets. So liquidity and volume is very important there on the cash order flow or the capital flow. So out of all of that, I've said this before, um, with the Python, it's easily by a long shot now, it's the most popular language out there for a variety of reasons. For those that may be in the know or not in the know, Python's easily the best language out there. It's easy, simple to use. It's a fairly rich ecosystem, as I said. You have a lot of the AI toolkits out there, TensorFlow, NumPy, Pandas, Scikit-learn, Torch, and that's all used in the data science world, machine learning, and now a very important way, financial modeling. With Python, it's easy to adapt things for a variety of things for ingestion, strategy development. That's from a financial perspective. And over time, AI is going to take over everything. I mean, it's already there uh, and just coming standard now. Python has a really good support system in the community. If you look at mine, I'm trying to develop out mine through my website. Um, there's a whole pile of resources out there. Python can integrate in a lot of different areas, Windows, Linux, the like, and development is easy. A lot of quant research and trading is done in Python quite easily. So essentially, as I said, all these projects are now being uploaded to my Quant Elite. You can find out more information there. Um, and this is just the start of it over the next few days, what I'm doing here. But as I said, with it, you can start in Python at the top level, what you download, and then you can use AI to advance that coding and actually convert it into a production ready C++ as well. You'd save a ton of time and frustration as well. So there's just a lot of stuff here that you can look at. I'm going to leave it at that. But if you want to talk to me, just click under quantlabsnet.com and look for bookings at the top. You could talk to me for a couple of minutes and we can set you on your way to meet your goal. Or if you want to learn more about what I do, get on my email list, just click on the learn and you'll get a free HFT ebook as well, and all done in C++, so you can see where the industry is going. I personally think the world of investing is going this direction as well. There's still going to be a lot of people out there wanting to hang on to their fundamental and technical analysis, but if you were to watch my webinars, which will soon be behind my videos here, um, these two critical webinars I'm doing on Bitcoin and gold, you can clearly see how these large institutions, including the large HFT hedge funds and whatnot, family offices now as well. A lot of it is manipulated, controlled, and quite honestly, if you're in the retail space like I am, you're just picking up the crumbs and you're just kind of like whizzing in the wind, I guess you could say, when the wind's against you. So that's all I could tell you. Some are choosing to follow what I do. Thanks to them, and we'll leave it at that. Thanks for watching. Have a good day. Bye bye.